trading at 64.44 in Asia today. Little changed from this morning. Essentially not a 0.1%. The markets after the rally over the earlier part of the week and the end of last week, on the back of fundamentally on the China US retreat from the trade war. We've seen all markets, for once, oil does seem to be aligned with the wider financial markets, who, after rallying on the back of some sense, I suppose, that Trump wasn't going to drive the bus off the cliff at the end, in the end. And so there's a bit of a relief rally, and that has plateaued. So all financial markets plateauing in search of some wind. Let's kick off this morning with Kate Durian, Mies contributing editor and non-resident fellow at the Arab Gulf States Institute in Washington. This is also a week, Kate, most pronounced in our neighborhood here, where Donald Trump, the president, Donald Trump is wrapping up his tour of the Gulf states, which is incredibly elaborate and significant amount of coverage, and very clear, it would appear to me, at least to every headline in every newspaper on the planet, the trillions of dollars that Donald Trump hoovered up for FDI investment into the United States during his tour. My question to you this morning is, what did the Gulf states get out of it? What did the Gulf states get for their trillions of dollars of investments?
Hi, Sean. Yeah, we were talking about this earlier. When you talk about hoovering up trillions of dollars, I mean, we're talking over a long period of time. A lot of it is sort of MOUs that we were saying earlier, just photo ops, unless they translate into direct foreign investment, you're not going to see this for a long, long time. And also, another thing is, if oil prices stay at current levels, Saudi's running a deficit, not the UAE. Qatar, if gas prices slump, which they're expected to, because there might be a glut soon. The US is speeding up its, LNG exports and approvals. It's going to be really hard to realize all these investments, but they know Trump. They've known him from from his first term. They know what he likes. They're getting weapons. They like their toys in this part of the world. The security guarantee, the pomp and circumstance. I think the weapons deals are the ones that they really were after. There was no talk of human rights. There was no talk of, I think they sort of got more out of it as well. They got what they wanted. They got to be the first countries that Trump visited in his second term. So I think prestige-wise, it was very, it was very good. And let's not forget, these countries, particularly Saudi Arabia and the UAE, and to some extent Qatar, are becoming more assertive, in their foreign policy, in their defense policies. They're no longer, the sort of vassal states relying purely on the United States for trade. They've now got China. They've got, they are the economies that are on the rise, and I think that's sort of reflected in the way that the visit progressed.
The somewhat elusive intangibles there, not as sort of firm as even an MOU $1 trillion, but nonetheless, there was some very significant real contracts. Boeing sold or secured very real airplanes that will be made in very real places and deliver. There was a very tangible contracts in the midst of all of those MOUs. There's no doubt about that. Let's go to Charles Elinas, CEO, Cyprus Natural Hydrocarbons Company, and Senior Fellow at the Global Energy Center for the Atlantic Council. Charles, your thoughts at the end of this week, the Gulf tour of the president, but also within that, a number of other major events that started the week with the China-US stepping back from the crisis, the trade war crisis, and also finishing with the Russian-Ukraine meeting that didn't happen. Where are these bigger global events playing out and their relevance for the energy markets?
Well, the fact that the worst of the tariffs problem didn't materialize, and it seems now that that is going towards some kind of resolution through bilateral deals, that has given the markets a relief. We've seen the stock markets rise very, very fast. Hope has returned, but in general, worldwide, but in places like Europe, it hasn't had the same effect. As you know, Trump is still avoiding Europe. There is still concern about what will happen with Europe. And perhaps later on we can discuss European gas. That was the subject of a big conference in Amsterdam where I was over the last few days. But the Russia-Ukraine thing, it's going to start. I think the discussions will start, but I don't expect that we will see anything major, but it will be the beginning towards something, maybe later on. So that also seems to be sort of taking pressure, a little bit of pressure away from the global situation. I think it's important to see what countries like India, South Korea, Japan, and later China do as a result of this change in direction on tariffs, and how fast.
I mean, it's a change in direction, but ultimately there's still quite a significant amount of tariffs and a significant amount of issues still to be dealt with, in the sense of how big of a disruption is this idea of pause? Does pause, the language is all weird here. I mean, they use the sort of elusive word deal. What does deal mean? It's not a contract that anybody's signing. There's a pause. There's a 90-day pause. What does pause mean? Does the world interpret pause as this is over?
Not necessarily over, but the discussion, it gives time for discussions and resolution. The actual deal between the UK and the United States is pointing towards a direction that, for me, it's hopeful that the situation with China would not have gone as far as that unless behind the scenes, the two countries believe that they are going to go somewhere. And I think they will. At the end of the pause, China and the US will end up with a deal. And once you have UK starting the process, China coming into it in 3 months, I think the rest of the world will fall into place.
Max Torres, Exploration VP at PetroTal, based in the US. Max, one of the biggest gifts perhaps that the Gulf states or Saudi Arabia and the other OPEC plus members in the Gulf states gave to Trump in recent weeks has been a $60 oil price. They've met his request, his demand, or that the oil prices be lower and the gas price at the pump in the US be lower as we start into the driving season. But with that, of course, is the US oil industry, which relies and depends on the oil price above 60 in order to sort of really make any money. How does that circle get squared in the US from your perspective, as it seems that Trump is closer to the Gulf oil producers than the Texas oil producers?
Morning, Sean. Good question. I think this is part of the big conundrum. I think basically we are seeing, I mean, last week, Brent was, 58, so, prices really dipping. Everybody concerned in the industry, I worked in a small independent, Latin American independent, we are all producers. So basically we're really concerned about, the price of oil. Here in the West, the same thing. Shale oil is peaking. As we all know. The Energy Information Administration is telling us, in a year, in 2 years, shale oil is going to peak. And it's going to rapidly start declining. So the U.S. will need, U.S. producers will need a better price. $58, $60 is not going to make it. So basically, we are in this contradiction. I will say, that he needs, as you said, lower pump prices, for political reasons. But at the same time, he also needs the Texas and the U.S. producers, and shale, is peaking 13 million or 13.4, I think today. But it's going to, rapidly come into decline, and they need the price. And this is also an issue for source, supply. I mean, where the next wave of supply is going to come. It's going to come from the Middle East, maybe, so those are the big questions, for the future. Right now we're seeing, oversupply. We are
I mean,
talking
is there a
about,
deal here between, I mean, the Texas oil industry that, along with the Silicon Valley billionaires or whatever they call them, the Silicon Valley bros, I think is some kind of term used. But ultimately, the Silicon Valley bros seem to be getting their payday big style, but the Texas oil men seem to be not. Is that a sort of misreading of the situation? Is there behind the scenes some real gifts to come for the oil and gas industry? Deregulation, for example?
Indeed. I think he's signing a lot of, new permits, contracts. He's allowing, LNG, producers to start, building new plants, trade deals. So, yes, I think they are getting, some of the deal, but in the years to come, they're going to be some issues. I agree. They're going to be some issues. Indeed, it's going to be a sort of a contradiction between, what the California guys or the tech guys and the oil producer. We're going to have some issues if the price of oil remains at 60. And that's a global issue. That's not a U.S. issue. Price of, as we know, is has different components, supply, OPEC, different things. But yeah, there's going to be an issue here, and I don't think that they're getting enough of the deal right now today.
Kate, looking at that particular narrative of the reasons why Saudi Arabia has led OPEC plus, or at least the OPEC 8, the OPEC plus 8 countries to increase supply into a weakening demand environment, seeing inventories build and price essentially still $10 below the price average it was before the announcement of the trade war on April 2nd, even though now the China sort of somewhat removed that, at least the war suspended, the trade war suspended, the oil prices recovered a few dollars, but still $10 short of where it was. If we see that as in the mix as a gift from the Gulf and the gift from Saudi Arabia to Donald Trump, is that gift now delivered, and now that Trump is leaving and going back to the US, that will change? Your thoughts on that as a reason why they did it? And B, does now Trump, having his tour finished, that present is now no longer offered?
That's a pretty expensive gift, isn't it? I mean, forget about the jumbo jet. No, I think there's several reasons why they're doing it. I think they've sort of decided that the time is right now to claw back market share. Even though demand is well, they're in a different world. If you look at the OPEC demand projections for the year, they're much higher than the IEA's or the EIA's. The IEA's just yesterday, I think, said that demand growth would actually slow down in the second half. So beyond the second quarter. So I think it's not really so much of a gift, but that I think they see it as sort of a temporary dip, and that because they expect demand to grow, I think OPEC's number is 1.3 million barrels per day. And they also see OPEC has reduced its expectations for US oil demand, oil production growth, as has the EIA, as has the IEA. So I think they see a sort of window of opportunity. They probably think that the dip is going to be temporary. And yes, it does give them, this sort of gift to Trump because he's worried about the inflationary pressure of his tariffs. But it's not really a huge amount. I mean, when you think of the spare production capacity that is being held, if you want to flood the market, Saudi Arabia can really flood the market. It's got, more than 3 million of spare production capacity. And don't forget that that policy also hurts Russia, which is an important ally in the OPEC plus. So I think they sort of it's a very delicate balancing act. And also, you know, there's been more sanctions against Iran, maybe more sanctions against Russia if we don't get a deal, which it doesn't look like we are, over Turkey. But then on the other side, on the bearish side, there's noise that they might be close to an agreement with Iran, which means Iran can maybe export. So, but all that is sort of in the future. I think sort of temporarily, they probably think this dip is temporary. The price seems to be holding, you know, Brent at around 64, doesn't seem to want to go much higher or much lower. So I think they're pretty comfortable at the moment. And we'll see what they do, you know, come 1st of June, whether they increase further. But I think the tendency is still for prices to sort of be on the softer side rather than sort of shoot up.
On that point, Dr. Charles, one of the obviously big unknowns in the mix there as we started our conversation today is the talks that didn't really happen in Turkey, but ultimately the momentum of a resolution or at least some kind of a ceasefire between Russia and Ukraine. One of the big headlines of the week, despite all of the others, was Trump saying, and his Secretary of Foreign Secretary saying that this will require Trump to meet personally with Putin to get this sorted. It seems like the next mountain to climb now will be setting up a meeting between Trump and Putin. But meanwhile, there's positioning around the situation, whether Europe and Russia returns to some kind of engagement where sanctions would drop away. Of course, industry and various stakeholders cannot wait until, you know, they can't, we can't all be on pause until there's actually a deal. So we're seeing the likes of Mercuria Energy Group, one of the world's biggest independent energy and commodity traders, taking a huge position in aluminium on the London Metal Exchange on a bet that easing of sanctions against Moscow will really tighten the aluminum market. So we're seeing big bets already being made on this activity happening. We're seeing a big court case in Switzerland regarding the Nord Stream pipeline bankruptcy, and that seems to be being paused in anticipation that maybe there'll be a new lifeline there. All by that is coming to my question as even if all of these things do come to fruition, the deal with Russia, does Europe likely change its spots? Does it have a big win or a lose here? Or how do you see that playing out from an energy point of view?
Well, the problem is that the European Commission seems to be bent on ideology and on driving this switch away from Russian gas completely. The shutting down of all Russian gas supplies to Europe by 2027 is being expedited by European Commission. They plan to put it in place by next month. But at this conference in Amsterdam, where everybody was there, the industry was there, not many believe that it's going to happen. The view is that if there is a peace between Russia and Ukraine, the fact that Russian gas is so much cheaper than anything else, and Europe has great problems with competitiveness and losing industry. Only recently, the chemicals industry warned that they are going to relocate to other parts of the world because they cannot afford to continue operating in Europe and in Germany. All of these point out to a situation where eventually money will tell. Basically, cheap Russian resources will prevail. And there was also a presentation on this. And we were reminded that if you look historically back, even to the last 2 centuries, Russian commodities have always been coming to Europe, irrespective of wars, irrespective of politics. Russian commodities continue coming to Europe, and they will continue coming to Europe as long as they are cheaper. The European industry, Europe cannot ignore them. So one way or another, these politics by the European Commission are considered to be temporary. And if we see...
What about, in the politics of the European Commission is They want to, like the Gulf perhaps, they want to please their bodyguard, Mr. Trump, who is threatening to remove their security blanket. And so they want to show very clearly that they're willing to continue to buy US LNG. That's part of the grand new bargain. This is the new world.
Buying US LNG will continue. I mean, US LNG will continue to be a major component of European gas industry, gas imports. That will not stop. But as Europe, I mean, there is an expectation that gas in Europe will continue to be used in large quantities. I mean, the European target to reduce emissions by 90% by 2040 implies that gas utilization in Europe would go down by 2/3. Nobody believes that. Nobody believes that that is going to happen, especially the last developments of energy security problems like in the Spain and Portugal, but also in the UK, point towards a direction where gas is proving to be indispensable to the future.
So you can have both. You can have both Russian return, and you can keep the Americans happy that their big win of the last few years will continue. Max, I wanted to get your thoughts on, it's really important for the rest of the world to try understand where Trump's leverage is in America right now. There seems in most analysis that he lost the war. He blinked with China, and he's obviously the oil industry doesn't seem to be, as we talked earlier, do they love him still? I don't know. But where is his leverage to continue to take on these very aggressive international trade wars going forward? Or have we seen the high watermark of that? Like, what kind of America is he going back to after his pretty enjoyable Gulf tour?
Well, I think he still has, very strong, popular support here. So, he won the election swiftly. He still, controls the House, the Senate, the High Court. So I don't think that, he is lacking support right now, but he just started, it's been 6 months or 8 months or whatever. So I think he's still, on the driving seat. So I don't see that this changing of music for the world is going to affect him politically, at least this year. We will see what happened with with inflation and consumer sentiment is coming down. That people still talking about recession. So it remains to be seen, how all these different parts and this new music that he's putting to the world, and also the US, of course, is going to play out in the future, because he just started, and he changed the tone, the tariffs, his rhetoric and everything. But we will how this will affect the lives of the common citizen here. It remains to be seen. We haven't seen up to now inflation, increase in prices, or lack of products, in the market. We haven't seen it, but my guess is that in a year or year and a half, we will see the impact of all this in the common citizen, and then that will be the big question. How much support he will have. But
let's
go to today. That's not an issue.
That's not an issue today. Let's go to the survey question, which is where we started our conversation this morning. It seems clear what President Trump got from the Gulf tour, trillions of FDI into the US. And as Kate did mention, a lot of those were repeated headlines because, of course, the leaders of the Gulf states who have visited the US in recent months have already announced a lot of these hundreds of billions of investment, at least in different forms. So perhaps some of it was dusting off old press releases, but nonetheless, a big win for the president. Lots of beautiful photo ops and so on. But what did the Gulf get? What was the biggest thing the Gulf got from the visit? One, continued US security architecture in this sort of transactional world that we now live in. As we know in Europe, You got to pay me to protect you has been the fairly straightforward mantra from Washington to Brussels, has now, and we've been living here in the Gulf for some years with the idea of U.S. withdrawal from the Middle East after Afghanistan, the idea that the U.S. was no longer seeing this as a critical wind region. So has the gift of this visit been a continued U.S. security architecture commitment? Two, it's confirmed the Gulf states' seat at the top table now globally, as Kate sort of indirectly mentioned there in her comments, that indeed the Gulf are now a big player in the world, that this visit sort of consolidates that. Three, which I think is worth thinking about, the U.S. abandoning its Iran war option. In the rhetoric that's come out this week, before this week, it was always, the language was, well, if they don't agree to what I'm selling, Trump has always threatened the war option would come. And even has said that the Israelis would lead that war option into Iran if indeed they didn't succumb to his. But it seemed a lot of the noise this week from Trump was abandoning Iran war option as one of the punishments for Iran if they didn't do a deal on the nuclear. Or four, none of the above, none of the above. There we go. That's optionality there. Biggest gift of the week from Trump to the Gulf states. Kate, your thoughts just closing out on that as we go forward. We're sort of halfway through this 90-day pause on tariffs. Oil prices have plateaued. Where do we get a new direction of travel, do you think, for the markets?
We don't. I mean, it's a pause. It's not a trade deal. In fact, the president doesn't have the right to agree trade deals. Tariffs, yes, but trade deals have to go to Congress. So I think a lot of it is just smoke and mirrors. We're just waiting and seeing. But at the same time, if you're an investor, there's too much uncertainty. You don't know what's going to come next. We still have that 10%. How it's going to impact. It ain't over yet. I mean, there's been And so I think we have to wait and see. I think the most important thing to watch out for now is the whole Iran negotiations. They seem to be continuing. We get a lot of noise out of Tehran. So 1 minute it's positive, then it's like, no, it isn't. But it looks as if he wants a deal. I mean, the thing about Donald Trump is, whatever you want to say, he likes to make deals as opposed to, and he said, he doesn't like wars. So I think that's really important. And it also is good for the rest of the region because, countries in this part of the world are worried. You don't need another Gaza. You don't need another. You just need a bit of stability, particularly for countries like Saudi Arabia, which needs foreign direct investment. And it's been declining. It hasn't really grown that much if you're going to, go for your Vision 2030. So I think you need the stability and you don't need Iran, you don't need an attack on Iran, even though Israel is sort of champing at the bits, wanting to go after its nuclear program. So if Iran sort of bends a little bit and you get some kind of a deal, then I think that would go a long way to sort of calming nerves in this part of the world, because you don't want capital flights. You don't want another war. That would be a far more damaging. I mean, Gaza seems to have been sort of pushed aside for the moment.
Charles, your thoughts on that same thesis? Particularly, I welcome there has also some significant changes this week in your corner of the Mediterranean. Syria, Turkey. Syria got sanctions relief from the president of the U.S., essentially a blessing of the new government in Damascus. We've seen in the same week, I mean, it's incredible stuff that would otherwise in another week be front page news everywhere. The PKK, the Kurdish insurgency in Turkey that's been 40 years destabilizing the country, came to an end, and on the back pages, nobody really paying much attention. But I'm wondering, from your perspective, how big are these developments for the East Med, for future opportunities in that region?
Well, as far as the energy is concerned in the East Med, the greatest problem continues to be Egypt. Egypt is in dire straits. They have just retained a new FSRU. They have now 4 FSRUs. And to me, all that indicates that Egypt has given up on the hope of recovering gas production and depends now greatly on importing LNG, very expensive LNG. They are unable to keep up payments with the oil companies. The oil companies go slow, production goes down, And Egypt has been caught in this vicious circle, and it's getting very worrying because it has a massive impact on their balance of payments. And I think when the dust settles in the countries around Egypt, Egypt will become the center of attention later in the year as to how to help Egypt out of this predicament. The problems are increasing, and the neighbors, I mean, Israel, for example, is not going to export any more gas to Egypt because they feel they have gone too far. The deals with Cyprus may or may not happen that fast because the oil companies are slowing down new investments. And Egypt is caught in a sort of a vicious circle in energy. So all these positive developments with PKK, with Syria are very, very welcome, taking political pressure away from the region. But I think the future will be around Egyptian problems with energy and how to deal with them. Egypt seems to be incapable of sorting these things by itself. It needs help.
Max, I wanted to take advantage of your insights and knowledge of Latin America, obviously an area you've worked in and know well. We talked about the impact of $60 Brent on the U.S. North American energy oil production. What about Latin, Guyana, Argentina, and Brazil? Are they likely to have a plateau year now at these prices? A decline, maybe even like the shale outlook is? What's the outlook for the Latin oil production at these prices?
Interesting topic. Yes, Latin America is a sort of on a different pace, on a different wavelength. Brazil, still investing on new production. Argentina, as you said, with the change of government now, rapidly going into trying to be a gas export. That they are investing money in pipelines. They have contracted LNG factories, to put together, their production, and they have, very ambitious plans in Argentina to start producing from Vaca Muerta, new gas and export. They're talking about, 1 BCF per day. So very aggressive plans, on Argentina, since the government has recently changed, their tone and their, political direction. Other countries, because of the price and because of political issues, slowing down. Guyana is not slowing down. Guyana is keeping up, the pace. They're talking about, probably 1 million, next year, daily production. Mexico slowing down. Colombia slowing down. So the whole region is slowing down except for Argentina, Brazil, and Guyana, which are the three main producers these days. Of course, Mexico is also a big producer. But Mexico, due to, unfortunately, the political decisions, is coming into decline. Pemex again, with financial problems. So Latin America living their own life, but obviously these low prices are going to affect investment, heavily.
Yeah, and which may not, whatever the long list of reasons why OPEC Plus are doing this right now, maybe that is one of them, to sort of knock off any of those marginal investments of higher cost production in the Americas, including shale. There's the answer to the survey question. Confirmed Gulf seats at the top table. Seems to be just tipping it as the biggest thing the Gulf got from the visit. And continued U.S. security architecture, another one getting some of the votes in this room. We'll post that on social and see where it goes. We'll wrap it up there. Thank you guys so much for your insights today. Brent crude oil, as we said at the top, is trading essentially little change this morning after a number of days of fairly significant recovery from the end of last week when Brent dipped below $60 a barrel. We're hanging close to 65 on Brent, and maybe 65 is the new barnacle on the rock that oil prices are happy and comfortable with. Charles Elinas, thank you so much from Cyprus, Kate Durian from Dubai, and Max Torres from Texas. Thank you guys so much for your time and insights this morning. Have a great weekend. All the best.
Thank you. Bye.